BTC rises, altcoins still stagnant. When will Altseason finally arrive? Have you ever opened your portfolio, seen Bitcoin skyrocket, then scrolled down, only to find your altcoins still stagnant, as if they're on a hunger strike? You think, why aren't my altcoins rising too? Isn't this supposed to be a bull market? Relax, bro, you're not alone. Many people are experiencing the same thing. Because the fact is, we're currently in a phase of the market that's a bit frustrating. Bitcoin is soaring, but altcoins are still stagnant. And here comes the million-dollar question again. When will Altseason finally arrive? Well, today we'll break it down together. What exactly causes Altseason to emerge? Why hasn't it happened yet? And how can we prepare ourselves so we don't miss the boat when the time comes? I'll explain everything from the basics, so you're not just following the Twitter hype, but truly understand what's happening behind the scenes. Because in the crypto world, it's not always about who's the fastest to FOMO, but who truly understands the flow of money. So sit back and relax. If you're on the go, focus. If you're scrolling while sipping coffee, prepare your mind and mindset. Because you're about to dive into an important discussion. Is the Altseason a myth, or is it just delayed? Chapter 1. What is BTC dominance, and why is it so important? Alright, before we dive too deep into Altseason, we need to understand one term that often appears on the crypto timeline: BTC dominance. You may often see BTC charts going up, but your portfolio is actually going down. Well, the main reason could be because BTC dominance is going up. But actually, what is BTC dominance? Simply put, BTC dominance is the percentage of Bitcoin's market share compared to the total market cap of all cryptocurrencies. Here's an example. If the entire crypto market is worth $1 trillion and Bitcoin's market cap is $600 billion, then its dominance is 60%. BTC dominance equals Bitcoin market cap / total crypto market cap x 100%. So, dominance tells us how much power Bitcoin has over the entire crypto market. If dominance is high, it means more money is flowing into Bitcoin than altcoins. If dominance drops, it means investors are starting to spread their money to altcoins as well. Why does BTC dominance rise when the market heats up? This is a classic mystery. Many people think that when the market turns bullish, all coins will rise together. But that's not always the case. Typically, the cycle goes like this. 1. Early phase of a bull market. People start entering crypto through the main gateway, which is Bitcoin. 2. BTC pumps first, because it's considered the safest, most established, and most discussed in the media. 3. Altcoins remain quiet, because new money is entering slowly and retail investors haven't yet experienced FOMO. So at the beginning of this phase, BTC dominance rises because new capital is flowing more into BTC. And don't forget, there's now a Bitcoin spot ETF. That's bringing even more institutional money directly into BTC, not altcoins. Why can BTC dominance decline? Well, the opposite is true. Dominance can decline if BTC starts to stagnate or consolidate. People begin seeking higher returns in altcoins. New narratives emerge outside of Bitcoin, like DeFi, L2, AI, risk-taking, etc. Retail investors start FOMOing into smaller coins. When dominance declines, altcoins typically start to rise one by one. From there, we usually enter a phase known as Altseason. However, a decline in dominance does not automatically mean that all altcoins will surge. We must observe the capital rotation. Where is the capital flowing? To ETH first? To other L1s? Or to Mycen coins? Real-world example of the dominance effect. A simple example. In 2017, BTC dominance dropped sharply from around 80% to 35%. At that time, boom, Altseason happened. ETH, XRP, NEO all rose by thousands of percent. 2021 was the same. Initially, dominance rose. Then after BTC pumped and consolidated, dominance began to decline. That's when altcoins started to break out. Now, in 2025, BTC dominance has surpassed 64%, even briefly exceeding 65%. That means a lot of money is still parked in BTC. Altcoins, still just spectators. Why should you care about BTC dominance? Because dominance can help you understand. Is the market still focused on BTC, or has it started rotating toward altcoins? The right time to accumulate altcoins. or whether it's time to reduce exposure to altcoins first. By understanding dominance, you can stay calm and not panic if your altcoins haven't risen during a BTC rally, because it might just be not the right time yet. In short, BTC dominance equals an indicator of Bitcoin's strength relative to the entire market. Rising equals money flowing into Bitcoin. Altcoins usually stagnate. Falling equals opportunities for an alt season begin to open up. And now, with BTC dominance still high, it means the signal for a major alt season hasn't appeared yet. But be patient. In the next chapter, we'll discuss: when does an alt season typically appear? And are there any historical patterns? Stay tuned, because we're getting closer to the core of the big mystery. Is alt season a myth, or is it just delayed? Chapter 2. Reading historical alt season patterns and indicators of when altcoins start to move. Okay, imagine you're sitting comfortably in front of your screen, looking at the crypto chart. Bitcoin has pumped 20% in the last 2 weeks. Your friends in the WhatsApp group are starting to whisper about alt season. Now, the sacred question arises. Is it time to jump into altcoins yet, bro? If you've ever felt FOMO in a phase like this, you're not alone. Many traders, especially new ones, often think alt season is like sunrise, inevitable, just a matter of time. But the reality is, alt season is a cyclical phenomenon, and not something that happens solely because Bitcoin is rising. There's a pattern, there's a trigger, and of course, there are pitfalls. 1. What is alt season? It's not just about altcoins rising. First, let's clarify the definition. Alt season isn't just about altcoins turning green all at once. A true alt season is when many altcoins rise multiple times over in a short period. Altcoins collectively outperform Bitcoin, and this happens across many sectors: Layer 1, DeFi, meme coins, AI, etc. Typically, alt season comes after Bitcoin has rallied significantly and starts to sideways or slowly decline. Why? Because attention, capital, and speculation begin to shift from the strongest asset, BTC, to assets with greater potential rewards, even though the risks are also insane. 2. Historical indicator, BTC dominance. One of the most commonly used indicators for detecting alt season is Bitcoin dominance, BTC.D. In short, this is the percentage of Bitcoin's market capitalization compared to the entire crypto market. BTC.D rises equals the market is leaning toward Bitcoin. Altcoins tend to lag behind. BTC.D falls equals capital is flowing into altcoins, an early sign of alt season. Real-world example. During the 2017 bull run, BTC.D plummeted from around 80% to 35%, and altcoins surged dramatically. During the 2021 bull run, BTC.D briefly dropped from 70% to 39%, and mini alt seasons emerged multiple times in the DeFi sector, NFTs, and even the metaverse. So, if you see Bitcoin dominance starting to drop significantly after a long rally, it could be an early signal of another alt season on the horizon. But be cautious. A small decline in BTC dominance is sometimes just a healthy correction, not necessarily a definitive signal. 3. Common phases of an alt season. If we look at historical patterns, an alt season typically has 3 phases. Phase 1, early rotation. This phase usually begins with altcoins that have a high correlation with Bitcoin, such as Ethereum, ETH, BNB, or other major L1s. This is the warm-up phase. Phase 2, mid-caps and narratives. Here, narrative-driven sectors start to gain traction. For example, during AI, RWA, LSD, liquid staking derivatives, or Layer 2 booms, small projects can surge by hundreds of % in just a few weeks. Phase 3, meme coin party and euphoria. This is the craziest phase. Everyone jumps on the bandwagon, including absurd coins with no fundamentals. Dogecoin, Shiba, Pepe, and thousands of other coins surge dramatically. This phase typically reaches its peak and often signals that the bubble has become too hot. 4. Signs of a bubble and the end of alt season. This is important so we don't get trapped at the peak and crash together. Here are some signs that the alt season bubble is peaking. Coins without a use case start rising over 100% in a single day. Many new coins list directly at 10x without correction. Influencers are actively promoting low-value coins. WhatsApp and Telegram groups are filled with "to the moon" without healthy discussion. Trading volume skyrockets on small exchanges. When these signals start appearing, it's better not to be greedy. You can start taking profits, move to stablecoins, or at least protect your positions. Remember, in the alt season, people can get rich quickly, but many also suddenly become poor because they exit too late. 5. Practical tools and signals for retail traders. If you're a retail trader who can't monitor charts 24/7, you need tools to help you. Some tools that can help you identify Altseason. Altseason Index, blockchaincenter.net, an index ranging from 0 to 100. Above 75 is typically considered Altseason. Trading View. Monitor the BTC dominance, BTC.D, chart, and ETH/BTC. CoinMarketCap and CoinGecko. Check market cap by sector. Telegram and Twitter alerts. Check trending narratives and sectors that are currently hyped. Oh, and one more classic signal that's often valid. ETH/BTC chart. If ETH starts to outperform BTC technically, golden cross, breakout, etc., it could be an indicator that capital rotation from BTC to altcoins has begun. Chapter 2 Conclusion. Entering altcoins can't just rely on feelings or group talk. You need to analyze data, monitor dominance, and recognize historical patterns. Alt season is like a party. If you arrive late, you'll only get the leftover snacks. But if you arrive too early, you might end up waiting alone in an empty room. So our task as retail traders, not to guess, but to recognize signals, and have a plan that can be executed when those signals appear. Chapter 3. Common fatal mistakes made during alt season. Alt season is like harvest season for traders. But just like farmers who panic when a sudden storm hits, many traders end up slipping up when they should be making profits. The reality is, not everyone who participates in alt season will profit. In fact, many end up losing significant capital precisely during the market's most bullish phase. Why? Because they're not prepared, whether in terms of mindset, strategy, or risk management. In this chapter, we'll discuss the classic mistakes that often trap retail traders during alt season, so you can learn from others' failures, not your own wallet. 1. Entering too late due to FOMO. One of the most classic mistakes. Wow, CoinX has already risen 500%. I have to get in before it goes even higher. This is the FOMO, fear of missing out, syndrome. However, if you only heard about the coin after it went viral on Twitter or trended on YouTube, the momentum is likely already over. Imagine this. You enter a coin that's already 10x in 2 weeks. You buy at the peak. 2 days later, the chart looks like Niagara Falls. You're not the one making a profit. You're the one providing exit liquidity for early buyers. The solution? Always ask yourself, am I buying out of fear or because of clear technical and fundamental signals? 2. Going all in on one coin. This is also risky. I'm absolutely sure this will go up 100x. Let's go all in. Sorry, bro. In alt season, extreme volatility is the norm. A coin that goes up 2x in a day can also drop 70% overnight. Going all in isn't a strategy. It's a quick way to go broke if the market reverses. Solution? Use a wise diversification strategy. 50% in large, liquid coins, ETH, major L1s, etc. 30% in narratives you understand. 20% in high risk, high reward, if you're mentally prepared. If you're a beginner, being even more conservative than that is fine. 3. No exit plan. This is the saddest mistake. I'm sure it'll go up again. I'll hold until next month. Unfortunately, that month is fictional if you don't take profits. Many traders have large, unrealized profits, but never execute them. Eventually, everything goes back to the original investment, sometimes even turning negative. Real-life example. During the 2021 alt season, many coins rose 20x, 100x. But when the market crashed, everything dropped by over 90%. Many regretted not taking profits, TP, at the peak. The solution? Set a profit target and discipline yourself to exit. Example strategy. Sell 25% when the coin doubles. Sell another 25% when it triples. The rest on a trailing stop or exit at a major resistance level. Or you can use the DCA exit technique, similar to when entering, but reversed. 4. Following coin hype without research. This coin is super hot right now, bro. It's definitely going to 100x. You might have heard that from influencers, Telegram groups, or even your favorite YouTuber. But do you understand? What's the use case? Who's the development team? Is there real utility, or is it just selling dreams? During alt season, many coins emerge just to ride the quick profit wave. After that, they're abandoned. You need to distinguish between hyped coins with potential, clear narrative, increasing adoption, healthy tokenomics, and hyped coins that are just noise, crazy marketing, but empty inside. The solution? DYTHR, do your own research. Use sites like CoinMarketCap, Token Unlocks, DeFiLlama, Twitter for narrative tracking. And make sure you don't just follow the crowd. 5. Unstable emotions. Here's the main enemy of retail traders: emotions. When the market is green, greed. When the market corrects slightly, panic. Seeing other coins rise, envy. Your own coin is red, regret. If you trade with emotions instead of logic or a system, you're handing over control of your portfolio to the market. Solution? Build a strong routine and mindset. Journal your positions, why you entered, when you exited. Limit checking charts every hour if it causes stress. Have a plan before the market opens. Don't be a trader who gets anxious every time a 5-minute candle changes color. 6. Misunderstanding about alt season duration. Alt season isn't all year round. Sometimes it's just 2 weeks, sometimes 2 months, and sometimes it doesn't come at all. Many think, during a bull run, there's always an alt season. Not always. Sometimes Bitcoin is too dominant. Sometimes the narrative isn't strong enough. Sometimes investors prefer to play it safe. The solution? Don't wait too long. Once you've made significant profits, evaluate. Is it still worth holding? Or is it time to shift to BTC/stablecoins? 7. Not prepared with a personal financial exit plan. Often overlooked, but important. Why are you trading? Your goal: buy land, pay off debt, increase business capital. If you don't have a personal financial exit plan, you could fall victim to the getting rich from one alt season mentality. In fact, it's healthier if you know what percentage of your portfolio you want to convert to IDR/fiat, when you need to liquidate for living expenses, when you should cash out completely and take a break. Conclusion. Chapter 3. Alt season can be a golden opportunity or a deadly trap. It depends on who is playing and how prepared you are. The biggest mistake retail traders make is not because they are stupid, but because they don't have a system and discipline. They follow the hype, exit too late, and place too much faith and hope. Remember, in alt season, capital can rise dramatically, but it can also disappear in an instant. Your job isn't to predict the future. Your job is to be a strategy operator with full control over your emotions and portfolio. Chapter 4. Strategies for retail traders who want to make money in alt season while staying safe. Alt season is a battlefield, but we're not elite troops with rocket launchers. We're retail traders. Our weapons are just determination, limited capital, and sometimes signals from Telegram groups. But don't be fooled. If you know how to play the game, retail traders can also make money elegantly. In fact, they're often more flexible than big players. In this final chapter, Chatty will guide you through practical and realistic strategies, specifically tailored for us, who don't have the same capital as VC firms, but still want to participate in the alt season profits in a smart and safe way. Let's break it down one by one. 1. Understand the type of alt season first. Remember, alt season isn't the same in every cycle. There are 3 types of alt season you need to identify before diving in. Mini alt season typically occurs when Bitcoin is stagnant and ETH starts to dominate. Short duration, high momentum. Narrative season, for example, if AI, DePIN, or L3 narratives suddenly boom, then all coins in that sector soar together. Full alt season, market euphoria. BTC has already risen significantly, and funds start flowing into altcoins across all sectors. This is the most anticipated, but also the most dangerous if you don't know how to exit. Strategy. Before buying, ask yourself, what type of alt season is this? Is it still early or already in the middle/end? 2. Adjust portfolio composition with dynamic proportions. During alt season, it's crucial to have a flexible capital allocation framework. A simple example for beginners: 50% in mid-cap altcoins, those with established ecosystems and solid volume, like Link, ARB, OP. 30% in narrative coins, e.g., AI, DePIN, modular chains. 20% in high-risk moonshots, microcaps you've researched yourself. If you're an active trader, you can make it more aggressive, but there must still be a safe zone to retreat to when the market suddenly turns upside down. And don't forget, always keep 10 to 15% in cash. This isn't idle funds. It's ammunition for buying the dip or exiting quickly if the market gets volatile. 3. Use a gradual entry strategy, DCA entry. Don't just jump in, especially because of FOMO. The strategy Chatty recommends, DCA entry based on technical confirmation and narrative. For example, you see the AI narrative starting to rise, choose 2 to 3 good AI projects. Start with a small DCA when there's a minor resistance breakout or volume increase. Add positions when the retest succeeds or the market becomes more euphoric. This way you avoid getting trapped buying at the top. Have room to scale positions. Can average in while staying rational. 4. Set sell targets. Exit from the start. A strategy without an exit is like riding a roller coaster without brakes. Remember, our goal is profit, not collecting digital tokens forever. Use a gradual TP technique, for example. Sell 25% when the coin rises 2x from the entry price. Sell another 25% at 3x. Use a trailing stop-loss or hard stop based on major support levels for the remainder. For those who don't want the hassle, use tools like limit sell, stop limit, or set automatic alerts via TradingView. The bottom line is, there's no excuse not to take profits. If you're waiting for a signal from the sky, the market doesn't care. 5. Risk management equals non-negotiable. Altseason is a place of brutal volatility. You can make a 200% profit in a week and lose 80% overnight. So, risk must be tightly embraced. Smart steps. Don't use money for daily needs. Always set technical stop losses, not emotional stop losses. Set a maximum loss per trade. For example, a maximum loss of 5% of your total portfolio per entry. This way, you can survive the battlefield and still enjoy a cup of coffee with a smile. 6. Focus on narratives you understand. In Altseason, narratives are like rocket fuel. But the rocket you're riding must be one you understand how it works. Example, you understand AI and data, focus on the AI narrative. You understand risk-taking, depend, or modular, look for a reasonable entry point. Don't follow a narrative just because it's viral on TikTok or X. If you don't understand the project, you're likely to enter too late, exit in panic, or hold a zombie coin that never recovers. 7. Prepare a big exit plan. Move to BTC, stablecoin, or fiat. This is the part that's often forgotten. After making big profits, what will you do? Move to BTC? Okay. Move to USDT/USDC? That's good too. Cash out to IDR to buy a goat or solar panels. Awesome. Determine first the price level that satisfies you. When to exit completely, even if the market is still rising. The percentage to convert to cash. And don't be afraid to take profits early. Remember the crypto proverb. No one ever went broke from taking profit. 8. Document all processes, journaling. This is a secret of successful traders that is rarely shared. They write down everything. Why they bought coin X. How they felt when the market went up/down. Why they sold at a certain price. This isn't for show. It's for evaluation and reflection. Altseason comes and goes, but your experience will continue to grow if you keep track of it. And yes, if you want to level up as a trader, journaling is the key. Chapter 4 Conclusion. Amidst the chaos of Altseason, those who remain calm and prepared are usually the ones who consistently make the most profit. You don't need to be a genius, you don't have to be a whale, and you don't need insider information. All you need is discipline, a clear strategy, independent research, emotional control. Altseason is a golden opportunity, but also a mental test. If you can navigate it wisely, it's not just your wallet that grows, but your quality as an investor and as a person also levels up. Altseason isn't just about profits, it's also about discipline. Wow. If you're still listening at this point, it means you're not just any trader. You're the type of person who doesn't just want quick profits, but also wants to understand the game as a whole. And that, my friend, is a rare mindset in this fast-paced crypto world. Now you know, Altseason isn't just about the rise in altcoin prices, it's not just about the green in your portfolio, but about how you, as a trader, can stay rational amid the euphoria. And let's be honest, that's far more important than chasing 100x tokens every week. Let's imagine together. The altcoin market starts pumping. Twitter is buzzing. Telegram groups are filled with signals. Everyone is saying, wow, this is going to be like 2021 all over again, bro. But you pause for a moment. Open your notes. Check your allocation. Look at the valid narrative. Set up gradual entries. Already have an exit plan. Smile slightly, then execute without drama. That's it. That's the upgraded version of the new trader who used to FOMO and jump in blindly. You've become a trader with an investor mindset. And trust me, this will take you much further than just following seasonal FOMO. Lastly, before we wrap up today's podcast, I'll remind you again, no matter how bullish the altcoin market is, no matter how many people are shouting bull run is now, you still need a compass of principles to guide every decision you make. And here it is, the fresh version of Mr. Suw Crypto's 5 Rules for the Altseason Edition. 5 Rules of Mr. Suw Crypto, Altseason Upgrade Edition. 1. Keep your capital cool first, then make cool decisions. 2. Don't be greedy, don't overposition. The market won't hesitate to teach you through losses. 3. Keep at least 60% in BTC or ETH. Altcoins are a bonus, not the foundation. 4. Stock up on ammunition. Buying the dip is only possible if you're not all in. 5. Long-term investing doesn't mean holding forever. It means knowing when to let go. If you enjoyed this episode, help Mr. Suw Crypto keep growing. Click the subscribe button, like, and don't forget to turn on notifications. Share this episode with your friends who love FOMO but don't have a strategy yet. And of course, comment on the YouTube video version. We'll definitely read them, and sometimes respond if we're not too busy analyzing charts. See you in the next episode. And remember, Altseason will come and go, but skills, discipline, and mindset will stick around if you keep learning consistently. From Mr. Suw Crypto's small studio, Chatty signs off for now. See you later. Stay safe, stay rational, and as always, DYTHR.